All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Thursday, the 11th. So, well, no video yesterday. I apologize for that. I was out. I was out of the office yesterday. One hell of a day. I never take days off, which I did not take a full day off yesterday. But I had to do something with my mom and my sister that I got roped into a couple months ago. So it is what it is. It's family. But yeah, a difficult day to be out of the office. So let's go into today's activity and kind of a little bit of a catch up from yesterday as things that I like to go over. But there's several areas to go over, and I know every trader that you listen, you turn on the financial media, whatever it is, CNBC, Bloomberg, and everybody's kind of talking about the same thing, right? When is what's happening with the market? Why is it selling off? When is it going to stop? Right? These are all the questions that everybody wants to know, and nobody really has the answer, right? Including it doesn't matter how smart of a trader you are or how long you've been your experience. Now, there are certain things to look for. I mean, I definitely look at a lot of different macro factors. I don't just look at equities. I don't just look. I tweet a lot about option activity, but certainly it's basically a puzzle. That you try to kind of put together to figure out some things, right? So we broke the 200-day moving average decisively again today. It's probably something that I don't want to say had to happen, but something with the way that we ended yesterday, right on, closing on the lows of the day. We don't just usually just bounce right back from something like that. That's really out of the ordinary for us to bounce back. So. This is what the S&P looks like. I think the main thing there is breaking the 200-day moving average. One of the ETFs that I look at a lot is VTI. That is all ETF. I'm sorry. All caps, right? Just to kind of give you a flavor of the whole thing. We stopped there at the 200-day moving average yesterday. So you got mid caps, large caps, small caps in this ETF, and that's a decisive break as well. The volume is really big on this break, and that's something that I tend to look for, and I talked about that a lot on Twitter today. I try to give as much information on Twitter, but keep in mind there's only so much I'm not going to spend a half hour trying to write a tweet so that it looks perfect. Basically what I noticed today was the heavy volume. And you could go through and you could look at this. There's a screen that I like to use, which gives you intraday, intraday volume, which is pretty nice in here. And you can kind of look at this over the last couple of days. But look at things like, yesterday there was heavy volume in SPY, but there wasn't the heavy volume in some of the sector ETFs, right? So look at the XLV, for example. This is healthcare. This is heavy selling pressure that was going on. And I sent a couple things out which I hope help people. I said, please don't, when you're under, when volatility has really picked up as it has, don't get captured midday. Midday is basically where you could see bounces, because if you look at the volume, this is almost called like it's like a VWAP curve, right? So what happens is in a VWAP, which is volume weighted average price, that is an algorithm that traders use. So when I used to trade institutionally, when an institution would give me an order and they didn't really care too much, they would just say stick it into the machines, VWAP over the day, meaning put it in your trading system and have it slice out orders throughout the day based on the volume curve of where the stock or the ETF trades the most in a day. So when does that occur? Where's the most volume? It's basically at the first 2 hours of the day and the last 2 hours of the day. During the middle of the day, there's not that much volume. So you could see a relief bounce, and you don't want to get captured, even though things could look really good. Here's what the VIX, one of the things that I tend to look at intraday is the VIX. So around 12 o'clock, you start to see like the VIX start to break down from the highs. Notice it has never lost the trend here, and it hasn't done that in a few days. It's been sticking with this 200 period moving average. But you'll see those false breakdowns. Like if you want to day trade that, that's fine. Like around like 11:30, if you want to try to trade a bounce for a half hour or an hour, that's fine. Is knowing that you're going to get, if you have that order, if you're holding on a little bit too longer, uh, basically what's going to happen is this, right? That volume. Whoops, it looks like I lost my screen. But we could look at this in terms of XLI, which is industrials too. It's good to look at a couple of these sectors. And I'll wait for this to come up here on Bloomberg. But you'll see what I mean, right? There's no volume between 12 o'clock to that midday, and then you see the volume really pick up at the end of the day. That's just how people will trade. So not only the VWAP algorithm, which is designed to do that, but a lot of times just people do not trade that much during lunch, around the lunch hours. It's just how trading always has been. So you really have to be careful of that, because I do see sometimes people tweet things out like, oh, we're starting to rebound. No, just the computer model, the algorithms and the trading programs are basically they're not executing for those times. So I hope that helps a little bit. The other thing, so we can look at a couple more of these. Another ETF that had a lot of volume, and again, I'm looking at this volume, as it's occurring in time slices. But look at the EFA. So this is international developed markets. I mean, this is some heavy selling pressure. So let me see if I could bring up my, what did I do with my spreadsheet that has this? Let me see if I can find that. Not spreadsheet, but I've got, oh, here it is. Someplace. Here we go. Yeah. So, yeah, I mean, this is close. I mean, we're getting there. And I think, as I'm going to go through a couple other things, this bottoming process, clearly we're not exactly there yet. So, there's no definitive signs, I think, of a bottoming process yet. Are we probably getting close? I think we're closer than we were yesterday, but it's a process, right? So you have to, like, if you're starting to buy things, and one of the things that I try to convey on Twitter today was, be careful if you're buying things and you've got this much volume where people are really selling. So when I look at option volume, which I'm going to talk a little bit about today, the option activity really becomes secondary on days like this. Single stock option activity can give some good ideas, good trading ideas, but mainly I use that in low volatility environments. When you have this much selling going on, so take a look. For example, I have this sorted by the highest volume. So you could see SPY traded roughly 4 times its average volume today. XLF traded 3.5 times its average volume, right? I mean, this is some big numbers. Shoot, I just lost that screen. Here we go. So it's just hidden behind here. So yeah, I mean, these are some big numbers. Could there be more tomorrow? Sure. And I think one of the things that I have to see, which we normally see in any multi-day correction, is at some point some mass liquidating of some ETF positions, some selling of ETF positions. We haven't seen any outflows at all this week. Now, it could be they haven't filtered through yet. There is a cutoff for when dealers have to redeem. That's 3 o'clock Eastern, and I don't think that that's changed since I'm not not on an institutional trading desk anymore. But if there's heavy selling like there was yesterday, going all the way to the close, the brokers are going to miss the cutoff, right? They will wrap that up the next day. So it's going to take a few days for the outflows to filter through the system. So just because you're not seeing any, it just means that the broker dealers are not reporting them yet. And again, like I said, when you have these big volatile days, and when I used to do this, yeah, I would wait. It doesn't really matter. You could sit long and short in your book for a couple days. It's not going to matter. That's essentially what happens. But yeah, if we go through the list, I mean, look at XLK, the technology ETF traded 4 times its normal, its 30-day volume. XLI traded 4 times. So this is heavy volume. This stuff has to happen. And it has to kind of go through the system. So just like people look at put call ratios, they'll look at sentiment. This is one of those factors, is that the ETFs, they have to kind of be thrown down in terms of people selling, right? In any time there's a bit of a market correction, there are people who are going to sell. They get scared no matter what. They'll sell at inopportune times. Just like we see the put call ratio get really high on the peak of a so I'll look at that a little bit. I should have that up here as well. I'm going to talk a little bit about bonds as well, what we're seeing in bonds, which is important. But the put call ratio, so same concept. It's just a different instrument. People will buy puts at the wrong time, right? They'll buy puts when volatility is at its highest, and that's kind of a dumb reaction. I don't want to call it dumb money, smart money, and dumb money, but people buy puts heavily when the market usually is when the volatility is the highest. Are we at that yet with the put call ratio? It is 1.23. I don't know. I mean, it could be another day. Maybe we need a day where we get to 1.5. But I think it's starting to get closer. You see the fear and greed index, which is another gauge of sentiment that people look at. That's in the single digits. So, you know, these things are starting to get to pretty dramatic, right? When you have that type of selling in VTI or sorry, the ETFs themselves, we're starting to get to the end, and it is a process. A lot of times, I always, you always wish that it's a 1 day type of sell off, but the majority of times it doesn't happen that way. So also take note at how oversold the indices are getting. I mean, I do really think that we're setting up for a big squeeze day. I don't know if that's going to be exactly tomorrow or if that's going to be Monday, but look at the RSI. It can't get much lower. Just like the fear and greed, we're at a 17 in the RSI. Usually when the indices get below 30, right, that's oversold. So we are really, really getting oversold. Now, and again, I don't know. You can look at IWM, we can see where the RSI is there too. That's a 16. And if you go back to that VTI ETF, which is all equities, I mean, that's a 15. So we're really, really have gotten that heavy selling pressure. This is now more than what we've seen back in sorry, the end of January, February. So, we're getting there, and you have a little bit of a blueprint. We can bounce pretty significantly, but that doesn't mean that we're not going to head back lower, right? So, what I'm saying is we could get a 1 day squeeze. Maybe tomorrow. Maybe it's going to depend upon a little bit of the bank earnings that are coming tomorrow. It could also be, next week we've got all the Netflix reports earnings. So it could be a number of catalysts, right? So that's something that I think is coming. But just because we get that 1 day of squeeze, it doesn't mean that it's going to be a trend reversal. All right. So that's my thoughts on that. If you start to look at the move index. So again, it's not all about equities right now. This is if you're not familiar with this, this is basically the implied volatility of the 1 month treasury options, right? So this is pretty good to kind of look at, just like there's a VIX and a VXN. It's important to kind of look at this. It's also important to look at credit spreads right now, which are widening. They've widened now for, I think this is the second or third day that they've been widening, right? I mean, that's showing pressure that is taking place in the credit markets. That's not good, right? So, like I said, it's a process, and I don't know if we're there yet. But man, we are really getting oversold in the indices. So I think we're getting pretty close, but we need to see credit spreads start to kind of turn the other way. And right now they haven't done that yet. So. I'll talk a little bit about what I did today, my trade of the day. But what else do I want to talk about? I want to talk a little bit about HYG, which has been seeing some big outflows, right? That's your high yield credit. That's also probably a must watch at this point. But look at the volume. Volume also huge here. So all of these are getting really oversold at this point. And there was a lot of put options today in HYG. So that's something that we started to see a little bit here and there, of put buying in HYG. Today, I think it reached I'm afraid to use the word pinnacle, but it's pretty high. I mean, we saw 50,000 of the October 30 puts. And I'll bring this up in terms of all, but just a lot of volume, a lot. Going up in HYG. I'm just looking at total volume. This is mainly the aggressive flow for the day, but there's 50,000 of the October 83 puts that traded, 49,000, all puts, 49,000 of the 83. November's 43,000 of the November 84 puts, 42,000 of the December 84 puts. Some of these I think were spreads. But if you just look at that put volume in HYG, it's pretty tremendous, going through some of that. So that's a little bit about fixed income. The trade of the day for me was GDX. And I'm going to talk a little bit about strategy. So those are some of the things that are on my radar. I'll share with you a couple other sectors or areas to watch tomorrow. But GDX, this kind of you have to look at and just say, hey, this is a nice looking bullish setup. And this looks like an inverted head and shoulders. I established this trade right off the bat this morning. I saw gold was up pretty decently. So why did I chase something that was already up 1%? It wasn't really because of the option activity. There was some GDX calls, but really it's just looking at what gold was doing. It hasn't done this in a long time, right? And once it really starts to move, I mean, this looks pretty coiled, doesn't this? I mean, look at the short-term moving averages. Now, there's not 3 wrapped around here, but there's 2. The 5 and the 20 have been wrapped around each other for a couple months. And I've been looking at this gold saying, what is going on with this thing? Why is it not reacting? Well, sometimes it just takes a day to kind of ignite. And this to me looks like a reverse head and shoulders. So I basically, once I started to see the price get above the neckline here, of the if I didn't say this right, but inverted head and shoulders. There's a lot of things going on here that looks positive. So was this a huge trade for me? No. I stick to my rules. It's the GDX is below the 200-day moving average. It's also been a very difficult instrument to trade historically. I did establish a position, but it didn't. It wasn't a full-on, put all my money into GDX type trade. But, that's basically how you have to kind of look at things after a big meltdown. You just want to start to get some winners under your belt and kind of get back into things. I said for the most part today I wasn't really going to trade that much. I wanted to see how things went because I know, again, with how this world works right now, it's not just option flow. It's not single stock flow. It's all of these things kind of put together. So you can't just look at one thing and say, oh, we're gonna bottom and we're gonna go higher. I think you need a lot of things to take place right now. And one of them was that washout in ETFs, which I'm hoping that was enough volume today to do it. You could see that there was more volume than there was yesterday, and you could also see that it's getting close to the volume that we saw back in February. Now, again, this was a multi-day process, and I think that's what you're going to have here as well. But I think what we saw today in the ETF world had to take place, and we needed to see another washout day. So things for tomorrow to watch. There's a possible meeting that's going to happen. I don't know how much. I mean, I think at this point we need to know that there's more than a meeting that's going to take place. There has to be something material that takes place other than these two just meeting. Does Trump want to actually break the market on this because of this trade war? I don't think he wants to go down as a president to do that. So I think at this point, you might start to see a little bit I'm hoping that you might start to see a little progress. If they don't come to their senses soon, we could see a bounce and then a big move lower again. So I think that has to get rectified one way or another for a sustained bounce. So names to watch tomorrow, I would say SMH, the semis. This is one of the first things that broke. Same thing with IWM. That also has to stop falling like this as well. So, all right, that's it for tonight. The video is right around 20 minutes. Plenty to go over tomorrow morning in our pre-market session. But, bottom line is when this happens, the other thing that I said to the room this morning was, correlate when the volatility, when the VIX moves up like this, correlations move up too. So it's not so much about single stock picking. If you manage to find a name that's not moving with the herd, congratulations to you. But volatility increases, correlation increases when volatility does. So you could really keep it simple. I did buy a little bit of spies at the end of the day. So that was one thing, and I'm giving it plenty of time. If I get that 1 day bounce, then I'll be rewarded. If not, I'm out to January, and that may cover kind of a little bit of an earnings trade. If I think things are going to do fairly well once we get into the heart of earnings season. So I've got a couple reasons to go long SPY here, even though it's broken. All right, guys, thanks for watching. Have a great night.